keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
What's good, everybody? It's your boy Reckless Rated Arrow. We are back at it again with another episode of Future Financial Strategies. This is a special monthly, though. We're doing the August financial recap. We got some good news. We got some bad news. We got some moves that were made. We've got some things to talk about. Obviously, we're going to get the recaps on crypto portfolio updates, as well as the straight through portfolio update, which is a monthly as well for Future Financial Strategies. And it is going to be jam-packed because August was a very interesting month. But let's jump into it. This one's going to be just a straight through, let you know overall what happened in the month of August. Let's dive into it. First, we're going to start off with the net worth. We had another down month. Yeah, full disclosure. When you're heavily invested and your net worth is tied to assets that are volatile, you are at the behest of the market. There's nothing that indefinitely goes up. I guess you could say real estate, if indefinitely going up means going up slow. Obviously, over COVID, the real estate went up fast. We benefited from that. But overall, when this is like one of those times where it's like, well, if you had cash, cash is king. Cash is king in short windows if you time them right. Trying to time the market is a fool's errand. So we don't do that. What do? We keep it in assets and we ride the waves. But this month, our net worth took a hit to the tune of $9,468.24 that we are down from last month. Still eyeing our stretch goal, though, as far as the net worth goes, of $250,000 this year. We're still in that realm. It's bouncing around, and until crypto, the bull run actually starts bull running, it is what it is. We're just indefinitely accumulating, which we have been doing. Moving forward, let's talk about the savings rate this month. Now, in comparison to last month, actually, let me pull up my sheet so I can look at last month. So I can look at some of these numbers. In comparison to last month, now we remember last month we were down to 26.81% savings rate, because not every month do we hit, and like we're always stretching for 40+%. I say 40 plus. If I could get to 50, that would be nominal. That's our stretch goal, is 50% target, which means that half of all the income coming in is going into savings, which for us is investing. But last month it was 26.81%, which isn't bad. It's more well over what most normal people are saving. But for me, that's kind of a dud month. Now, this month, we're back on track. We are at 40% for our savings rate, which means out of all the income that came in, 40% of it got reinvested back into building additional income, building future stability. We're following the Bitcoin standard. We bought Bitcoin this month. Investments, we bought more income. We've got our portfolios that we're building out for the income portfolio. So we did what we needed to do. We had a good push this month. I gotta stop saying I'm gonna work on that, but it's early. Well, it's actually not that early. I'm just a little bit tired, a little bit hype, and I like to shoot these as soon as possible because I am on a time crunch as it's the end of August. So like I've got stuff that's getting deployed this upcoming week when you see this. So we're scrambling through these. Yeah. So savings was up to 40% this month. We're back in the realm of where I like to be. Did it again. We're back in the realm of where I like to be. So with that said, we're moving on to the next metric, which is credit, which we're actively in a utilization phase right now. So the credit is down. We are down 2 points, with the lowest score coming in at 739, which is still better than most people. Got to stop saying when people reference their credit scores and they're like, my credit score is always at 800, that means you're not using it. If you utilize your credit, it fluctuates. It changes. As we are sitting here, and actually I think moving forward, now that we're on this debt repayment cycle, I think we're going to actually start tracking and dialing in on that. We're going to do another monthly episode that's just going to be focused on how I am crushing, destroying, and managing my current debt load. But my credit score went down 2 points because of the current debt load. It is what it is. So as you're using it, you start taking pings on that. As you pay it off, it goes back up. So like technically speaking, your credit should be a fluctuating number if you are utilizing it. If you're just sitting there with an 820 credit score, an 840 credit score, or an 800 credit score, and it never changes, and you're not using it, and you just have it to just have, that's kind of pointless in my opinion. So ours ranges anywhere from 720 to 820, generally speaking, depending on how I'm utilizing it. Now, we're going to start utilizing it in a couple of different ways moving forward as some opportunities open up to us. But overall, that's the skinny of it. We're within the range for what I like to see for my credit. And it's about to be on the upswing because we are dialed in and focused on eliminating the debt. Total save this month. Now, that's another one that I want to see. So total save this month, we saved $2,490. Last month, it was $1,452. Now, that's kind of I like that. I like to see more money going into the market than not going into the market. It makes me feel good. It makes me feel like I'm moving in the right direction. Generally speaking, this is also how the income continues to accelerate and grow. As we are looking at things right now, that's a solid number. It was 40% of the income that came in. We had a pretty decent income month, and that's moving on to our last metric. Now, this is going to be a short video, but like the income piece, I do want to expound on a little bit. So this month's income was $806 more than last month's income. Why? Well, there's a couple of reasons. This was a 3 payday month. So if you get biweekly paychecks, they come in and you have a few months where you get 3 paychecks. So that was one reason. The other reason was the income we broke the threshold of $1,000 on our dividend, on our income portfolio. Now, as that portfolio grows, all we're buying in that portfolio is income. So the income should continue to grow as well. And the goal there is we build that income out until it covers all of our major expenses. And then we continue to build it out until it covers all of our income, period. And then you just continue to build it out, and then you can live off of it. That's the goal. It's an experiment that we're doing to see if it works. Now, I'm thinking that at about probably $45,000, once that portfolio gets up to $45,000, it's currently sitting at like just under 16 based on market fluctuation because the underlying assets are volatile, so it goes up and down. The income also goes up and down. It's a variable income, but it's been on a steady incline because as these dips occur, we are buying these dips. The specifics that we're using, and this will be covered more deeply in the portfolio recap where we cover the positions and the moves that have been made in depth in that video, which we will dive into that. We are looking at all high yield dividend. And I understand that the low yield dividend people that are looking for portfolio growth and not necessarily focused on income will be coming for my neck because they're like, it doesn't work. It's a scam, blah, 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 blah. And I'm coming from the crypto space. So things that you can't call something that's been approved by the SEC a scam. Like, it's not penny stocks like that. It's crazy. You have to get these ETFs approved. And apparently, if the system that you're working in works the way that you say it does, if the SEC approves it, then it shouldn't. It's not like people, like these companies spin up these ETFs to be in business for a year. These aren't fly by night companies. It takes a lot of money to set up an ETF fund. It takes a lot of paperwork that's expensive to set up an ETF fund. So these people aren't making these with the intention of just being around for 2 days and going out of business. That would make sense. So the other thing is, we are looking at specifically income. Now, I can use that income to build my long-term portfolio, which is the goal. And that'll have growth-focused things, that some of which may pay a dividend, which is an added bonus. But that portfolio is focused on growth. You cannot make a portfolio that's focused on income and say that you're an income dividend investor. I want to get paid. And have these portfolios that are over 6 figures in value. And my $16,000 portfolio is pulling in more income if you're income focused and you're not educated on the actual income producing things. Now, I'm not saying that they're the best for growth, because they're not, but the focus is income. If your focus is income and you're talking about a 50-cent dividend on a stock that costs $300, you never retire. You never get out of the rat race. You never get ahead until you have $1 million saved up, which you're doing the slow way, banking on the growth. It just doesn't make sense. Like, people don't have time like that. Like, we're grinding our bodies to the bone. We're sacrificing our lives, our time, our families, all of these things. And you're saying, oh yeah, just wait until you're 65. I think that the common theme here with most of these gurus in these spaces that are talking finance, that are talking investing, specifically when it comes to passive income, they're suckering you into continuing to have to work until you're 65. That's the only thing that I can think of, because logically it doesn't make sense. I'm like, if you're talking income, the NAV erosion doesn't matter, because you need the income. But the stock doesn't go up. Price appreciation on the underlying asset doesn't matter as long as the income is stable. As long as the income is still coming in. And I understand that most of the people who do these passive income conversations are talking about businesses that pay a dividend. Cool. The dividend's it's an enticement. What I'm talking about is high yield income investment ETFs. So they're actually doing options plays in the market. There's something going on in the back end. And I'm making the assumption that they are better than me. I am hiring someone to do that for me, because I don't want to do it. I don't want to make options plays and have to sit and watch the market all day. I don't have the time to do that. I have to go to work. So it's not just a business that's just like throwing income out that's going out of business and they're just doing whatever they can to get people to stay there. It's not a business. It's a group of guys at a hedge fund that are doing options plays for me on my behalf on an underlying asset that I'm picking, or a pool of assets. I mean, it just depends. I'm big into yield max right now. That's all of my positions currently are yield max. We will be expanding that out within the next couple of phases. We'll be talking about that in the portfolio video. So if you're interested in passive income, dividend investing, there's nothing that's truly passive. I actively manage my portfolio. I'm not trading every day, but I am looking at it for when there's price spikes and major dips, and I'm moving those positions accordingly. Because there is some appreciation in my portfolio, but also the goal is to get that income in. Now, when we're talking about the income, the other thing that should also be noted is, as the income is going up, our next target metric is $1,500, because that's the cut to the quick. Like, if I had turned off streaming services and all the extras, I could exist off that. So that's the first target metric is just like the core essentials. I can pay the mortgage, I can keep the utilities on, I can make the car payment if I needed to. Don't have a car payment, I recommend paying off your cars as fast as possible. But if I had a car payment, or if I wanted to start saving to get a new car, which I'm actively doing, at that point, $1,500 is the quick for me. I'm sitting in a pretty decent position, which is fortunate. You know, obviously you gotta give credit where credit's due. We made some strategic moves, and yeah, so we're in a position where we can cut down to $1,500. I'm making some shifts on some cell phone plans. We're about to get some more money invested. Like I'm trimming the hedges actively. We're in a recession. They're saying it's supposed to get worse. And one of the things I said was we've got to get rid of the consumer debt. Like debt to assets, debt going into assets I can deal with, but like the consumer part of it, like the part that I floated myself to continue to be able to invest a little bit heavier into the crypto space, which pulled the trigger on that a little bit early, but that's okay. That's okay. We're now in a buy space. We've got the Bitcoin standard set. So we're making the moves necessary to have those long positions, the extra long positions. We're just indefinitely buying, and it's fine. But yeah, it's important. I would rather have had that money in the market, but now I don't want to do that, and we're gonna pay off. We're gonna continue to keep focusing and chunking down, because I've got everything else set into zero interest positions, so those are manageable. We're managing them. But the consumer debt, we're machine gunning that down. We also got the medical debt added in with that now. So like that went well beyond what I thought it was going to be. It wasn't as bad as I thought it was, but once we get these final couple of bills sorted out where I know what I owe, we're gonna start making the moves necessary to move things around to get that handled. Caveat being, I do not want to liquidate my assets to pay back the debt, even though I would still be coming out ahead, even though we could still go back in and bring it back up after the fact. I don't want to have to go that route specifically to do that, because the income that we have coming in right now is very, very close to hitting that first metric. And I'm like pretty sure. And once I hit that first metric, once this is paid off and I can just funnel everything through the income portfolio, it's going to be a game changer. I'm 80% sure that that's going to be a game changer once we make that move. I'm throwing around that idea though, because like I look at it, I'm like, man, I really don't like looking at this debt. Like if I just liquidated everything and started over and then restarted with just funneling the income through the income portfolio and then figuring out what I could do after a certain point. But it's like, I don't want to do that. I don't want to do it at all. Like that would not make me the happiest. So we're grabbing stuff from where we can and making those adjustments, because right now it's manageable. Like we're getting ready to start seeing what type of chunks the velocity banking strategy. Also, I've got a lot of strategies I get to test on this now, but we get to start seeing what the velocity banking strategy looks like when you're tackling a larger sum of money, because the first time it was a few $1,000s, which like we're talking like under 4. So now we get to look at it at a bigger chunk of money and go, okay, well, let's see what this looks like with living life with this chunk of money now, like a bigger chunk, and just hitting it with the velocity banking strategy with a couple of little added bonuses that Reckless Ray's secret sauce. But until then, we did round this out to 20 minutes. So like that's solid. Until the next time, folks, if you have not already, please definitely drop me a like, definitely hit the subscribe button, and definitely share this. Like people need to hear this information. There's very few people out here. And I mean, within the high yield dividend space, because we're so niche and so counterculture, kind of a little punk rocky, you do get a lot of people telling the truth. There's very few people that are giving you the full spectrum. I'll put it that way. Because a lot of people just talk high yield dividends, and the information, I haven't come across one of those guys that honestly I don't like. There's conversations to be had over specific strategy, but like they're coming from a different sectors than me, different backgrounds than me. But as far as people opening the window and actually tracking everything as like a whole human, there's very few people that are telling the truth. They're all giving you something to get a bunch of views on YouTube. And I found out that with anything, the truth does not sell well. People don't like hearing the truth. They want this overarching, slightly out of reach ideology that, you know, this guy's at the mountaintop and he's telling you what he did to get there and you feel good about it. And yeah. And I'm in the mud with you. So like we're getting it out the mud, we're getting out the market, like we're doing what we got to do, and we're making these moves, and like it's showing you the progression versus sitting at the mountaintop telling you I'm here and you're broke and posturing on the internet. But that's going to be it for today. It's your boy Reckless Ray Dinero. Till next time, folks. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.
Peace.